On Business Incorporated today, cost of living protests resume in Kenya. Ghana lawmakers passed bills to meet up with requirements for IMF loan. And Rwanda repays $400 million Eurobond. Good afternoon. Welcome to Business Incorporated here on Channels Television. I'm Amy John Mekwa. We'll start off with the market as usual, starting with the NGX trading negative at intraday. Looking at the number there, it's red at 52,239.85. South Africa is on the flip side, almost 0.5% positive. It's the only positive for major markets in Africa at intraday, 77,912.50. We look at other markets there. Egypt is down 0.45%, 17,222.40. Kenya closed yesterday deeply in the red, more than 1% down at 106.52. We slide over to the Middle East there and see that our major markets were mixed at intraday. Abu Dhabi in the red, 0.13% at 9,656.50. Dubai takes the other way, 0.04%. It's marginal, but at least it's positive. 3,578.86. And then we look at other region there. Looking at Saudi Arabia, it's red, more than 1%, 1.31%. And Qatar, 1.51% at 10,487.82. From there, let's head to Europe and see what's going on there. Inflation is the title of the conversation this afternoon. Overall inflation in the Eurozone accelerated slightly. Their numbers were out yesterday about 7%, while core inflation, which excludes food and gas, has finally slowed a bit. The new figures offer a somewhat blurred picture as the European Central Bank meets on Thursday to decide on a further interest rate hike. Let's have Andrea Nepori now join us from Berlin with the details. Andrea, good afternoon. Well, we've seen different numbers for inflation in April. What are the latest when we look at the different countries that make up the Eurozone?
Good day, and thanks for having me. According to Eurostat, overall inflation in the Eurozone was 7% last month, which is slightly more than 6.9% in March. On the other hand, core inflation, which excludes energy and food, is down to 5.6%. Now, core inflation is a useful indicator to understand how severe inflation really is, because food and energy can have a very fast-moving price and skew an overall reading. On the other hand, food and energy are exactly what's driving up the cost of living here in Europe. And while we can drive less or keep our heating lower, there's not much we can do about buying food. And here's a few examples. According to Eurostat, the price of sugar increased 61% in the EU over the last year. Price of eggs, 30%. Price of meat, 16%. And here in Germany, price of potatoes, 20%. So as you can see, the actual increase in cost of living is higher than what inflation numbers can suggest.
Yeah, well, it reminds me of the conversations we have here in Nigeria, getting the figures to capture the reality. Well, how are these numbers affecting policy decisions?
The policy against inflation from the European Central Bank right now is to keep the course with higher interest rates, to cool down the economy and rein in prices. That is the only thing that regulators can do to try and fight inflation. We'll see how much they'll raise on Thursday, when the ECB will meet to decide on the latest hike. Now, of course, higher interest rates also mean higher cost of borrowing money and in general of doing business. That is the entire point. But it can have surprising effects on the broader economy, as we've seen, for example, in the banking sector in the US. That said, the good news is that despite the strict monetary policy and all the headwinds we're facing, first and foremost the Russian invasion of Ukraine, the European economy was resilient enough this winter to skirt a recession, a so-called hard landing scenario that luckily hasn't materialized.
How's this affecting markets and market expectations?
Markets are waiting for the ECB interest rate decision on Thursday, which is coming on the wing of the Fed decision in the US today. Now, as we've seen before, the issue with raising interest rates is that it depreciates interest-related financial products. So banks and other lenders that are overexposed to what that they might run into problems. And that's what happened in the US with Silicon Valley Bank and the like. So fear of a new banking crisis has made the US markets pretty jittery, and that's been reflected somewhat in Europe with indexes mostly in the red so far. In the next couple of days, we'll have more clarity on the actual impact of the policy decisions on the markets overall.
Yeah, we'll certainly be waiting for Thursday tomorrow to see which way the ECB goes. Thank you so much, Andrea. Still talking about markets, Asia-Pacific markets largely fell on Wednesday as investors look ahead to the U.S. Federal Reserve's policy decision overnight. Most economists surveyed say that they expect the Fed to hike rates by 25 basis points, with the remainder forecasting a pause. Well, let's look at the numbers right behind me there. Nikkei 225 is green, 0.12%. At 29,157.95. Shanghai Composite follows suit, 1.14% at 3,323.27. Hang Seng Index, however, is on the flip side, more than 1% in the red, 19,699.1. Kospi also almost 1%, 0.91% to be precise, at 2,501.40. In Australia, following that hike, the market is still reacting negatively to it. We see that the AX200 is at 0.96% in the red, 7,197.40. In the United States, stock futures rose as investors looked ahead to the Federal Reserve's latest policy decision. Dow Jones Industrial Averages, see there, it's in the red, all red, the futures, that is. Dow Jones is up 0.15% at 30,822. S&P 500 also in the green, 0.17%. Nasdaq also in the green at 0.17%, 13,206.75. Now let's take some steps back and meet with Maria in Washington, D.C. to give us details of Tuesday's trade.
The U.S. stock market tumbled on Tuesday as the Dow Jones was down by 1.08%, the S&P 500 down by 1.16%, and the heavy tech Nasdaq also down by 1.08%. This was largely due to the fallout of First Republic Bank, as many investors are concerned about the banking industry. This could have major impacts on the stock market for days and weeks to come. Investors are also watching to see what will come out of the two-day meeting of the Federal Reserve, as it is expected that there will be an interest rate hike of 0.25%. Even though we are still seeing the labor market cooling and much of the economy cooling, we could still have this interest rate hike have a major impact on the U.S. stock market.
Well, it looks like markets all over commodities and different stock markets have already priced in that 0.25% hike, but we'll get the confirmation in a couple of hours from now. Now, still staying in the market, shares in companies that specialize in publishing school textbooks and offering online classes took a big hit on Tuesday after signs emerged that AI bots, artificial intelligence such as ChatGPT, getting popular these days, were eating into their business. Silicon Valley-based Chegg is an education tech company that provides online homework help and textbooks. And on Monday, its CEO admitted that the explosion of generative AI chatbots had hurt revenue. According to Chegg, in the first part of the year, they saw no noticeable impacts from the ChatGPT on new accounts growth, as they were meeting expectations on new sign-ups. However, since March, the artificial intelligence space has seen a significant spike in student interest in ChatGPT and is having an impact on new customer growth rates. Specifically, the 18-year-old company reported a sales drop of 7% over 1 year, as well as a 5% fall in subscribers. It's a new world, the world of artificial intelligence. Now, in the oil space, now prices extended losses on Wednesday after plunging 5% in the previous session as investors fretted about the health of the U.S. economy ahead of an expected Federal Reserve interest rate hike later in the day. Brent futures fell 1 cents. Both benchmarks closed at their lowest since March in the previous session, when they also recorded the biggest one-day percentage declines since early January. So both the Brent and WTI losing more than 1% in one trading session deserves some attention. That's why I have Sunil Dixit. He is the Chief Technical Strategist with SK Charting, joining us now to let's see really what's going on in the oil space. Good afternoon, Sunil, and thank you for your time this afternoon.
Most welcome.
Yeah, so this is, more than 1% for drop, in a trading session. That's a huge one. More than $1 drop. They're losing 2.5% for Brent, 2.7% for WTI. What's really going on in the oil space?
Well, the growing concern of a global recession, the signs of which have been coming from emerging banking credit crisis, that has put severe pressure on WTI prices across the globe, and WTI has been seen trading below $70. It has reached $69.30. And next, we are looking at next support of 68.50. And if prices do not show a strong recovery above $72, I think the 200-week simple moving average level, which is at $67, that cannot be ruled out in the near term. But on the other hand, if there is some recovery, there is some bounce back from the lows, and prices start recovering, you can expect 72 or 73.80 on the upper side.
So the world has thought that with the recovery of demand in China, that oil prices will stabilize. But now, okay, we see the threat of recession in the United States, for instance. Their debt ceiling has already been hit, and we don't know what they're going to do. Are they going to adjust the ceiling again? Is there going to be a default? So all of this obviously is fueling into the fear of recession. What about the supply side? What's going on there with Russia, for instance? We don't know if they're cutting production by 300 or 500,000, and some of those factors driving the supply side.
See, the buzz around about OPEC Plus going for a cut, but on the other hand, the Russian oil minister also making comments on that. But overall, you see, OPEC and OPEC Plus, they have a bigger agenda. They will sell oil, but they'll sell at a higher price. So they will keep tightening supplies and creating artificial bottlenecks. They want to sell at a higher price anyway, and they will never want oil to go below $70 in the present circumstances.
And the cuts that OPEC Plus or Saudi Arabia and Russia is supposed to take effect this month, May. So I wonder what that would do with the already tight space that we see.
Yeah, much has to be seen on how Fed's further announcement of June rate pause makes an impact. That should also create significant moves in oil as per demand and supply is concerned.
All right, thank you so much, Sunil Dixit, Chief Technical Strategist with SK Charting. Thank you for your time.
Most welcome.
All right, let's take a break now. After that, we'll stay on the African continent here on Business Incorporated.
It's an entertainment.
Welcome back. Still watching Business Incorporated here on Channels Television. Now, in India, the protests have continued in the face of a ban. On Tuesday, that was yesterday, Kenyan riot police fired tear gas on opposition MPs during a new round of anti-government demonstrations over cost of living crisis and last year's disputed election. Tear gas canisters were launched at members of opposition leader Raila Odinga's Azimio's L.A. Umoja and coalition near President William Ruto's office in downtown Nairobi. According to some of the footages released of the incident, the MPs were seeking to deliver a petition over what Azimio has described as unacceptably high cost of food, fuel, and electricity, and then they met this opposition. This is obviously an ongoing story. We've been told that the protest, they have promised that this protest will continue from tomorrow and all through the week. So we'll follow up on this consequently. But still in Kenya, the World Bank will provide a 40.8 billion shillings, that's about $300 million, interest-free loan to Kenya Power to help the utility pay debts, revamp its aging transmission network, and expand the national grid. Disclosures by the Bretton Woods Institution show that the billions will be released through the Treasury under a 7-year program dubbed Green and Resilient Expansion of Energy, GREEN. Kenya Power's debt to electricity producers and other suppliers was $87.5 billion in the year ended, beg your pardon, 87.5 billion shillings, not dollars, in the year ended June 2022. And it had 103.84 billion shillings in loans from local and foreign banks in the same period. The billions will be released in tranches and will cement the World Bank's position as a critical financier of the utility that plunged into a half-year net loss in the period that ended last December. The program is to also support gradual clearing of outstanding dues of KPLC to other sector agencies such as KETRACO and REREC towards achieving financially sustainable sector operations. Gen, IPPS, and other suppliers will also benefit from reduced arrears. In Ghana, the lawmakers had a special sitting in Accra, the capital, to pass finance bills urgently required to back the government's bid to secure an International Monetary Fund loan. The parliament, which had been in recess, reconvened to review the excise tax stamp and approve concessional loans totaling $710 million. Second Deputy Speaker Andrew Asayama Amoako said that the chamber had approved standards for the automatic exchange of financial accounts information, while a bill to revise the formula for distributing education trust funds was postponed. In Angola, the National Oil, Gas and Biofuels Agency, ANPG, Sonangol Group, and Diversified Energy subsidiary, Total Energies EP Angola, have signed a heads of agreement related to the future development of the Camia and Gulf Hino fields located on blocks 20 and 21 in the Kwanza Basin. Total Energies disclosed this and notes that this is an important milestone towards a final investment decision, which is expected this year after partners and authorities' approval. The future development project on blocks 20 and 21, located about 150 kilometers southwest of Luanda, will comprise a floating production, storage, and offloading facility, and this is the 7th for Total Energies in Angola, connected to a subsea network. The design of this new project includes electrical generation from a combined cycle turbine and a zero flaring concept, allowing a lower carbon intensity. Total Energies EP Angola, which is also the operator, holds an 80% interest in each block, while Sona Gold holds the remaining 20%. Rwanda has successfully repaid its $400 million Euro bond despite pressure in the country's coffers that have come under intense pressure due to ongoing global shocks linked to the prolonged impact of COVID-19 pandemic, the war in Ukraine, and the appreciation of the US dollar. Reports indicate that the full payment, which was due this week, was successfully made. Officials from Rwanda's Ministry of Finance and Economic Planning said the repayment was made possible partly due to the availability of financing from the International Monetary Fund. The government had set aside $63 million as part of the International Monetary Fund's special drawing rights allocation that it received in 2021 as support to fight against the impact of COVID-19 on the economy. The 10-year Eurobond, which was worth $620 million, issued in April 2021, attracted a coupon rate of 5.5%, lower than the 2013 rate of 6.6%. The lower yield led to a reduction in its annual interest payment over the next 10 years, which has helped to make its debt sustainable. In South Africa, the Special Investigating Unit, SIU, has told higher education institutions owing the National Student Financial Aid Scheme to immediately pay back the money. This comes as the University of Johannesburg pays back NSFAS about 311 million rands in unallocated funds for the period between 2016 and 2021. The money was for students who qualified for funding but either changed institutions or deregistered. The payments that UJ has made brings the total amount that NSFAS has received from the institutions of higher institution to almost 350 million rands since the SIU instituted its investigation in September 2022. That's the program for this afternoon. Thank you so much for being a part of Business Incorporated. Let's do it again tomorrow. I'm Ini John Mekwa. Enjoy the rest of your day.